Welcome, you're watching Budget Trade and this is Samina Nalwala. Railway stocks are literally on a high and with fresh highs ahead of the union budget. While the budget, which is going to be tabled on the 23rd of July, is seen as a people's budget, what's sticking for the railway counters? Stocks like RVNL, Ircon International, IRFC and a whole other bunch of listed railway companies were trading at their all-time highs. On Friday, the Union Minister Ashwini Vaishnav announced the production of 2,500 new general passenger train coaches and approved an additional 10,000 coaches. Talking about railway infrastructure, he said that about 5,300 kilometers of railway tracks have been added so far this year and about 800 kilometers have been added. Well, keeping that commentary in mind, budget stocks or Modi stocks, like they're more popularly known as, have been seeing aggressive buying interest. But let's go to my colleague Anushi first, who takes us through what is the sector expectation from the much anticipated budget in a few weeks.
With the upcoming budget, railways continues to remain in focus. We've seen a sharp jump up in stock prices of some of these railway counters. Look at an RVNL, 38% of gains in this last 1 week itself. Now, if you even look at 1 year, there has been a rally in most of these counters. Here again, IRFC leading the pack, 500% gains over the count, while other railway stocks also, if you see, most of them clocked about a 2 to 3x times of growth in their stocks. But what is happening? What's the budget allocation over the years? Let's understand that. So if you look at the FY22 to 23 period, 1.5 lakh of crore of allocation from the budget side for the Ministry of Railways, which has then increased to about 2.4 lakh crores, so 50% jump that we are looking at. Coming to the interim budget of this year, 2.52 lakh crore is what was the allocation. But you know what's interesting over here? If you go back to the 2003 to 2004 to 2005 period, the allocation was 8,000 crore. So we are seeing a sharp jump in this allocation over the years. So with this, again, we can just look at the railway track that they have built over the years to get a better sense. So during 2004 to 14, there was about 15,000 route kilometer built. But if we go back to 2014 to 23 period, we are almost seeing this number doubling to about 25,000 route kilometer. Again, major projects that continue to remain focused for this budget and even the previous budgets include the Gati Shakti cargo terminal, the Vande Bharat trains, Bharat Gaurav trains, as well as the Amrit Bharat stations and trains. Again, key highlights of this interim budget include implementation of 3 economic railway corridor programs. This was about energy, mineral and cement corridors, the port connectivity corridors, along with high traffic density corridors. But what stood out for this budget was the conversion of 40,000 conventional rail bogies to Vande Bharat standards. So here, some of the key players that continue to remain in focus include Titagarh Rail and Jupiter Wagons. But other than that, also there were some key developments which happened over the year. This includes Cabinet approving about 6 multi-tracking projects across Indian Railway in 6 states. This project is estimated to be around 12,000 crore and this will be fully funded by the centre. So with this, we will be seeing about 1,020 kilometer extension in the existing network of Indian Railways. So these are some of the prime budget expectations that we can see for Ministry of Railways this time.
Interesting, sharing the markets already running ahead of themselves with regard to those expectations. But we have with us Ashish Mudani, Senior Vice President and Co-Group Head, Corporate Ratings of ICRA, joining us to talk to us about a relatively smaller sector, but nevertheless very important at this juncture. Thank you, Ashish, for joining us this afternoon. Ashish, there's so much of excitement, conversations. We've seen the stocks run up significantly in the last couple of weeks to the run-up to the budget. The interim budget was, exciting for rail counters. But as we go into budget 2025 on the 23rd of July, what do you think is going to be the big bang announcements for the railway sector? To begin with, actually, will there be any big bang announcements in this, for the railway sector?
Yeah, hi, Samina. Good afternoon. What we are expecting at the overall capital outlay level, let me just talk from a broader perspective, then I come back to the railway subsequently. We are not expecting a major deviation from this 11 lakh crore number that has been announced during interim budget. Because if you look at the first 2 months of the current year, that is April and May, the overall capex outlay is down by almost 14%. Now, Q2 being a leaner quarter, so a lot of ramp up is expected in Q3 and Q4. So we are not expecting a major hike or outlay increase in the whatever was announced in the interim budget at a broader level. But one should note that the 1.6 lakh crore delta that has been announced in the interim budget from the last year, the capex incremental, out of that 70,000 crore delta is largely driven by an item which is classified as a new scheme. Now, because of that, what is interesting to see is how that amount of 70,000 crore get allocated within various ministries. So that is one thing that needs to be watched out for in the coming budget. But if you look at the railway outlay, capital outlay, it has grown by almost 12% CAGR for the last 5 years, and that is very, very impressive. Even the number that you were showing some time back, while the year-on-year outlay may looks modest in a low single digit, but if you compare it with the FY23 number, it's almost 50% high number. So there has been a strong ramp up that has already happened. Now, what has benefited out of this is largely if you look at the two specific segments. While we are talking about the incremental track outlay, we are talking about multiple wagons and rolling stock manufacturer benefiting. But two specific thing I need to highlight over here is the outlay which is towards the rolling stocks, and also the Amrit Bharat station, or what we call about this railway station development. A lot of impetus is over there. Just to give out certain numbers over there, in FY23, the items under customer amenities, which is broadly cover the station development, that is only 2,200 crore. Now that has been hiked almost 7 to 8 times in the current budget. Now it is almost 16,000 crore plus. So the players in these segments are expected to benefit. Similarly, if you talk about the wagons and the rolling stock manufacturer, because of this all-time high order awarding that has happened, so all these wagon manufacturers are sitting on a very strong order book, and they are also going to significantly benefit from this particular thrust. But if you look at the broader thing, we are not expecting any material or major deviation from what was announced in the interim budget. Over to you, Samina.
Right. Ashish, just take a step back, and you talked about the capital outlay. Now, I want to broaden this discussion, not just sticking with railways, but logistics as whole as well, because, I was having a chat with Tata Projects, and they said, for India to become a manufacturing hub, we have to bring down logistics cost. So I want to bring in road as well into this conversation. How do you think, or who do you think could be a key beneficiary of this increased capital outlay in terms of allocations? Which sectors stand to gain most in this space?
Zamina, like my team also tracks the road sector. So when you talk about road and railway combined, both of them are a major beneficiary in the last 10 years. And the statistics also showcase that. The current year, the number looks modest if you look at on a YOY basis. But if you look at in the broader perspective of the last 5-year or 10-year horizon, the number looks impressive. And both is like what you rightly told. If you want to become a manufacturing hub, we are talking about a 5 trillion economy. We are talking about reduction in the logistics cost. Railway will definitely play a very vital role, and so is the road segment. So both this segment, I don't want to differentiate between any one of them. Both of the segment will be a major beneficiary, and we'll continue to see a strong impetus going forward also.
Right. While this is going to be a significant beneficiary of the government's outlay and capex plans, what do you feel, or which companies do you feel stand to benefit the most? Because some may argue that a lot of this may already be in the price. One thing is winning orders, but what else needs to, before we go into companies actually, what else needs to be done in this budget to improve the balance sheet of these railway companies, improve cash flow, and generally make them or bring them up to speed with some of the other private sector players?
So, if you ask me, the two specific items that we feel, or ICRA, we feel that needs to be focused on from the railway side is, one is the monetization thing. I think there is a significant lag to what was the initial target and the number that has actually been delivered. So in monetization front, there is a lot of scope. And the second space is the public-private partnership. While in the road segment, we have seen a strong ramp up and things have largely stabilized, and the lenders are also very comfortable over there. But in railway segment, we have not seen much of the public-private partnership over there, and that's where the government has to put a lot of funds. So if the public or the private money comes over there and that gains traction, it will be beneficiary for the overall everybody in the system, and all the stakeholders will benefit out of it.
Right, and in terms of railway stocks, Ashish, or companies, who stands to benefit the most from this budget 2024-2025? Of course, what stands out for me is the fact that every morning RVNL is either bagging an order locally or internationally.
See, Samina, I won't like to comment on any company-specific thing, but as a sector, if you ask me, uh, we have seen a lot of competition in the road segment in the last 1 year because of decline in the order inflow. So many of the civil construction entities, they have received station development projects, and they are building on their order on this particular segment. So this is one pie which is going to benefit some of the EPC entities also who are already executing projects or getting new projects in this particular segment. Wagon manufacturers, if you have seen that order book is pretty strong for the next 2 to 3 years, so they are also well placed on that front.
Right. Ashish, also, while you can't talk to me about specific companies, but in terms of preference, do you prefer the private players or the public sector, PSU players? Because the gains are very obviously in the PSU names more than what we are seeing amongst the private names.
Samina, if the capital outlay is going to increase, everybody in the ecosystem will benefit. So even if RVNL is getting these orders, eventually some of this will get subcontracted to the private players also. So at a broader level, if you look at almost all the players who are in the system will benefit out of it.
Right. And very lastly, Ashish, while you can't comment on stocks and you would like not do that, just at a more macro level, there are wants and there are needs, right? What do you think is imperative for the rail sector to see in this budget announcement?
Okay, so if you
in terms of prioritizing the needs.
So it's a very tricky topic because there are multiple priorities for the sector. But if you see from the government's point of view, 2 or 3 things very clearly stands out. One is the monetization. I think that needs to gain traction, and some measures needs to be taken in place so that they get certain money out of it, which to fund incremental growth or capex in the railway sector. Second is the public-private partnership. Private sector needs to be encouraged over here. And the third, again, going forward will be the investment towards safety, and I think that will continue to be I think a lot of investments have happened in the last 4 or 5 years, and I think this is one of the key priorities for the government, and this will continue to see a lot of traction going forward also.
Right. Thank you very much, Ashish. Great talking to you and getting a perspective on roads and rails and what the sector expects from this much anticipated budget. We have with us Ashish Chitramuta, ED Portfolio Management Services at JM Financial, joining in. Hi, Ashish. Thanks for taking the time out to talk to us. Ashish, to begin with, and there's so much of euphoria in the markets. We made a new record high yesterday. Of course, today we've taken a little bit of a break. What could, in your opinion, happen to the markets following the budget? Will it continue to make all-time highs, or do you anticipate a drastic correction or a strong bout of profit-taking?
Good morning, Samina. So as far as broader markets are concerned, yes, we are hitting fresh all-time highs, but we need to check few of the data points in the sense that if you look at, the total profit made in 2019 of Nifty 50 companies and 2024 profits, ideally these profits have grown at a CAGR of 18%, and that's the CAGR we have seen in terms of market capitalization growth. Also, if you look at from a forward PE multiple basis, Nifty is trading around 20 forward PE multiple, which is at a slight premium to its 5-year average. At the same time, if you look at high frequency indicators, whether it's electricity bills or whether it's e-way bill generation, all these are in a very, very strong uptrend. And we are seeing a very strong GDP expansion, so almost 8% GDP growth we have witnessed. And in days to come, we believe that 7 to 8% is the GDP growth we are expecting. So keeping all this data in points, it looks like if any correction comes, it's going to be a buy on dip kind of opportunity. And from a technical perspective, we believe that we are in a very, very strong trend. And a lot of these sectors, whether it's IT, banking, financials, they have not contributed significantly in the last 1 year bull run to the broader market. So looking into this, we believe that if this sector starts to contribute to this rally, then there's a further leg to the rally. So I think any dip of 4 to 5% would be a very good opportunity to add onto the markets. So we don't expect any significant correction in the broader market. And if any correction comes in the range of 5 to 6%, that would be an ideal opportunity to add further positions into the market.
Right. Ashish, but at the current juncture that we are at, are you open to putting fresh money to work within says, budget trades, so railways, defense, fertilizers. These are stocks and sectors that have been rallying up on anticipation of a budget that could be favorable to the sector. But what I want to understand is, should somebody take a fresh bet just ahead of the budget? Is that a good tactical trade?
So, Samina, I'll give a disclosure that, in terms of our PMS in the last 15 months time frame, we have been building a lot of positions in defense and railway, and in fact, power also. So these were the three sectors where we were significant overweight. And actually, a lot of these stocks in our portfolios have gone up significantly in the last couple of months, whether it's into defense or railways. So as far as fresh allocation is concerned, yes, the risk reward looks little stretched at this point of time. But in terms of opportunity size, we believe there's a phenomenal opportunity which is being seen in this space. But definitely from a valuation perspective, we are not very comfortable. But yes, in our portfolio, we are holding these names and continue to hold these names because our entry price and the current levels are giving us that comfort. But if the fresh allocation comes, then I think one need to be little tactical or kind of create a position in a staggered manner rather than at one go. Now, in terms of opportunity size, first thing which I would like to point out is if you look at financial year 13, the railway capex was close to 49,000 crore. But in financial year 23, this capex number was close to 2,45,000 crore. And in financial year 28, we expect this railway capex to reach almost 3,80,000 crore, which means from current to financial year 28, we are expecting a 10% CAGR in terms of railway capex. And if this happens, then there is going to be a lot of opportunity which we are going to witness in the wagon segment, in the Vande Bharat segment, in the metro coaches segment. And that's the reason companies like Titagar Wagon, as a disclosure, we have been holding Titagar Wagon since 320, 330 in our levels in our portfolio. And this stock has, we started tracking the stock when the stock was doing a monthly wagon production of almost 75. And currently, this company has crossed a monthly capacity of almost 1,080 wagons a month production. And now they are looking for passenger coaches also. So that's a new optionality which is coming into the business. So keeping this in mind, I think it's a good opportunity, but stock is at an elevated level. So we suggest that any good dip of 7 to 10% correction in these stocks would be a good entry point for stocks like Titagar Wagon or Jupiter Wagon. Or for that matter, a company like BML, which is into metro coaches, which is into Vande Bharat opportunity, and also opportunity of defense and mining construction is also there in BML. So these are the names which I think on any dips, this opportunity is really large, and these companies will be a big beneficiary of this opportunity. But as a disclosure, we continue to hold Titagar Wagon and BML in our portfolios.
Right. With that disclaimer, Ashish, the risk reward may not be so favorable if you've got to make fresh allocations to some of these railway stocks. But if one wants to, make use of the current opportunity, and if you do get that correction of 5 to 10%, beyond the three names you mentioned, would you add any more railway stocks in terms of preferences? How about an RVNL, because that seems to be winning orders pretty much every single day? A RailTel and IRCTC, do those also look good to you from now until the budget? It's a tactical call, fundamentals and technicals in mind.
Yes, so I think RailTel is a very good opportunity according to me, and I think we, as a disclosure, we have this stock in our portfolio as well, because we believe that in terms of RailTel, Kavach is a very big opportunity. We have so far deployed almost 1465 route kilometer Kavach as an opportunity, and this is a very large opportunity which we believe is going to come. So obviously in the public sector space, RailTel is going to be a big beneficiary of this entire Kavach opportunity. Apart from that, some of the private players like HBL Power is also a very big beneficiary of this Kavach opportunity. So as a disclosure, we continue to hold RailTel and we continue to like it from a technical perspective even at current levels. My sense is stock is forming a very, very strong base after consolidating for last 6 months. So there is a strong support at 10% lower level from in RailTel. And looking into the long-term chart, it looks like stock is headed towards 700, 750 kind of trajectory. So our preferred pick in this entire space would be RailTel. With a disclosure, we continue to hold the stock in our PMS also. As I mentioned, in the wagon space, it's Titagar and Jupiter Wagon, which looks very promising. BML is one stock which we like from this perspective. Also, if you look at from an electrification perspective, or companies like Siemens as an MNC company is also going to be a big beneficiary of the railway capex which we are going to witness. Stock has already seen a very strong rally, but my sense is stock is forming again a very strong base around 7,400 kind of trajectory. So I think Siemens is also one stock which looks very good in the large cap MNC space for playing this entire railway opportunity.
Ashish, I'm going to be a little more greedy and just move the conversation beyond rail stocks. Any more stock ideas, strategies that one could consider for the upcoming union budget where you still feel that there is a favorable risk reward?
Yes, so I think, Samina, power is one space which looks very promising. We have been very constructive on the defense space, but the stocks have seen a massive rally. We continue to like this defense opportunity because of the strong order book, because of a strong, I would say, the revenue visibility which we witnessed, because of the indigenization factor. We have seen for a company like Bharat Dynamics, which used to do a 65% indigenization at one point of time, is now doing an indigenization close to 91%. So the operating margins have jumped up. Same is the case for a company like Solar Industries, which is into explosives. The current, top line almost 15% comes from defense, and it is going to go up. So these are the opportunities which looks promising. And as a disclosure, we continue to hold these names. But from a current risk reward perspective, I think power is one space which is offering a very strong risk reward. Within that, I think as we say that the current capacity from 176 gigawatt is going to become 500 gigawatt, which implies a 17% capacity CAGR growth in the renewable energy segment. So obviously, different companies, whether it's NTPC in the power generation, which is going to create almost 30 gigawatt of renewable energy capacity. In terms of grid, I think grid connectivity, power grid would be a big beneficiary of this trend. In terms of high voltage, HDVC player, Hitachi Energy or Power India, which we call today, is a company which is going to be a big beneficiary of this entire grid connectivity space. And then some of the wires and cables player like Apar Industries. These are the names which we believe are going to be big beneficiary of the capex which we are going to witness in the power space, and these companies still offer reasonable risk reward. As a disclosure, we continue to hold these names in our portfolios.
It's amazing. We're always, have people and viewers writing and asking for mid-cap ideas, and some of the names that you mentioned will, of course, make good investment opportunity. Thank you, Ashish. It was always good talking to you. Have a good day, and we'll speak to you soon.
Thanks, Amin.
With that, we're completely out of time on Budget Trades. Thanks for watching.